Unusually weak is how Goldman Sachs is describing recent hedge fund performance. Chinese ADRs may be partially to blame here, with a third of hedge funds holding an American depository receipt of a Chinese company at the start of the third quarter. Since February, the average Chinese company trading in the U.S. has been cut in half, with the most popular ones among hedge funds lagging the less popular ones. Alibaba, for example, had ranked as the top 5 most popular hedge fund holding for 11 consecutive quarters. In 2Q, though, it dropped down to number 7. Other popular Chinese names include JD.com, Baidu, Didi, and Bilibili. Short interest had risen modestly during the first half of the year, but not enough to negate the losses on the long side. Goldman notes that the, quote, overall popularity of China ADRs registered as the highest in our data history, making clear that hedge funds were generally not prepared for the regulatory shift and its impact on share prices. As a result, Goldman's hedge fund VIP basket has lagged the S&P 500 by 13 percentage points during the past 6 months, matching 2008 as the worst stretch on record. Kelly.
Mohammed has a question, Leslie.
Hi, Leslie. Leslie, do we have a feel for where hedge funds are in terms of the notion that Chinese stocks are becoming uninvestable?
It's a great question. Obviously, in the second quarter data that we have so far, they were positioned for little change in the way of Chinese regulatory scrutiny. Clearly, they were surprised by the third quarter revelations on that front. It would be expected to see in the next quarter of data that they have taken down their positions, just given where the market has gone so far. However, historically, hedge funds have been much more weighted toward China than overall investors, overall active managers even have been, because they've been able to generate such alpha historically. It's been seen there's this sentiment among hedge fund managers that you have to be invested in China because of the growth potential there. And so it'll be interesting to see in the next quarter of data, and as we continue to talk to hedge fund managers about their strategy, how that's really changing, and whether this is just a pause or whether they'll ultimately get back in, or it's kind of a permanent sea change in the minds of hedge fund managers.